All right, most of you are mostly here. So once again, for those who just joined, good morning again. Welcome to our XM webinar. Right, welcome to our XM webinar. Today we'll be covering on the Ichimoku cloud. All right. So the Ichimoku cloud, if you all did not know, Ichimoku cloud is actually a indicator. Right, it's actually invented by the Japanese, and the Ichimoku cloud can be very complicated, right? There can be a lot of components inside the Ichimoku cloud, as well as many of y'all can ask, oh, what's the Ichimoku cloud used for, right? So today we'll be going through how to use it, how I use it in the charts, right? So this webinar will be split into two different components, right? The first component I will be talking via the slides, right? So it might not be too visual, it might get a little boring, but I'm sorry, right? Because it is mandated for me to cover the slides, right? I have to cover the slides to go through with you some of the contents that XM have provided, right? I cannot just totally ignore the slides. So bear with me. Not saying the slides are bad. It can be a little boring, but I'll try to make it as interactive as possible. And along the way, if you have any questions for the slides, please just type it inside the questions tab below, so that I'll be keeping a close look on the questions so that I can answer your questions as it comes, right? So I do not want a case where you are confused at one step and then you continue to get confused for the rest of the slides, right? However, the next component after the slides, I'll be showing you all some of the graphs, right? So I'll show you all firstly, how does Ichimoku cloud look like on TradingView, right? How it looks like on using it on TradingView, as well as how I use Ichimoku cloud for my analysis, right? I'll bring out some of the old trades that I did, so that I show you how Ichimoku cloud assisted me in showing my bias, right? Assisting my bias. All right, without further ado, let's get started with the slides. So like I said, inside the slides, we'll learn about the Ichimoku, we'll learn about the calculation, and we'll be learning about the signals, right? So basically, I will just want you to pay attention to what is the components of the Ichimoku cloud, right? So that will be the bulk of our slides, right? That will be the bulk of our slides, all right? So here we go. So this is just a background of the Ichimoku cloud. So the Ichimoku Kinko Hyo, which is the a short form now, we call it Ichimoku cloud, but the original Japanese who invented it, the Goichi Hosada, when he invented it, he called it the Ichimoku Kinko Hyo. All right, so he offered it to the public when he published his book in 1969, and it defines supports, resistances, identify trend directions, reflects momentum, providing trading signals. All right, all these can be used using the Ichimoku cloud, right? So the Ichimoku cloud is basically translated from Japanese, right, as at one glance or at one look. So basically, one look at the Ichimoku cloud, actually not really, because the Ichimoku cloud is quite complicated, right? How is it one look? But however, when it is formed, right, it has the meaning that at one look at this indicator, you will know what the market is trying to do, as well as where the market is forecasted to be, right? So what the Ichimoku cloud does is not only telling you what is happening right now, but rather what is forecasted in the market as well. So for example, moving averages is a lagging indicator, right? However, Ichimoku cloud will be a leading indicator. You'll be looking at forecasts of the market, right? So that's about Ichimoku cloud. And just some history. After decades of study and technical improvements, the Ichimoku cloud has gained traction as a standalone indicator, right? So it was conceptualized by this Goichi Hosada, and now it is much easier, right? So the Ichimoku cloud that you see now in charts, right, is already much easier than the original concept that the first person have invented, which is the Goichi Hosada guy. All right. So here we have three key time periods I used to calculate the 5 individual plots. So I realized I did not even give you a briefing on what are the individual components there are, right? So firstly, I will just say there's no slides on this. I'm not very sure why, but there's 6 components of the Ichimoku cloud, right? They are namely the Tenkan-sen, the Kijun-sen, the Senko span A, the Senko span B, the Kumo, and the Chico span, all right, which is also called the lagging span. All right, so don't worry, all these names are in Japanese. I don't expect y'all to memorize it. I don't expect y'all to know how to calculate as well, right? However, I will be going through the calculation, right, so that y'all will know how it is derived, right, so that y'all will have a better understanding of the Ichimoku cloud. However, I do not expect y'all to calculate because now the graphs, once you press Ichimoku Cloud in TradingView, and then they will automatically come up with the Ichimoku Cloud all calculator all ready for you to use, right? So there's no need for you to do calculation. So all you have to do now is to understand how it's calculated and understand what does each component stand for. All right. So we have Tenkan-sen, right? So the Tenkan-sen uses a default of 9 periods. All right, so 9 periods means basically if I choosing a 1 hour time frame, it is using the past 9 hours, right? And the calculation for the plot is the highest high in these 9 hours and the lowest low in these 9 hours. You add them together and you divide it by 2. All right, and the highest high and the lowest lows are the highest and lowest values of the specific number of time periods. All right, so like I said, the Tenkan-sen uses a default of 9 periods, so you can actually adjust. However, I usually do not even really use the Tenkan-sen in my technical analysis, to be frank, all right, because the Ichimoku cloud is quite complicated, right? So I'm just showing you how it's calculated, right? Later, how I do my analysis based on this indicator differs, right? Differs from chart to chart. All right. So for the Tenkan-sen, I realize it is quite hard for you all to visualize as well, because instead of going through the components, XM put the calculation method first. So you probably do not even know which line is the Tenkan-sen, right? So okay, maybe I will just mix it in with some of the charts on my own, right? So to make this simpler for all of you all, right? So here I have my charts, right? So I realized it is not very smart to cover everything at the last, but it will be smarter if I go through the components of the Ichimoku cloud first, before giving you the before showing you the calculation. It will be better, so you all understand it better, right? So here we have our Ichimoku cloud, right? You can see there's a lot of components in it, right? So we have the Tenkan-sen, right? So Tenkan-sen is actually the blue line, right? So I will just label it as I go along, right? So I will use the call out, all right? So let me just take away the magnet. So you see the blue line here, you can see there's a blue line, is the Tenkan-sen, all right? So you can see this blue line here is the Tenkan-sen, all right? And then we have the Kijun-sen. The Kijun-sen is basically this red line here, all right? The red line is called the Kijun-sen. So let me just take it out once again. Kijun-sen, all right? So this is the Kijun-sen. And then we got the Senko span A, right? The Senko span A is the green line, right? You see this green area here, and then you see this red line and this green line that is engulfing the plot, right? So I will just label this, the green line, as our Senko span A, right? Or it is also known as our leading span, all right? So I'll just write here Senko span A. And then we have our next span here, which is our Senko span B, which is our leading span B. All right, so I'll just write here Senko span B. All right. And last but not least, there's only one thing that's not labeled. It is the there's last 2 things that's not labeled. One is the cloud, right? Obviously the plot, right? The piece that is colored here, right? So this is just called the cloud, which is also Japanese for Kumo. So this guy named it the Kumo. So Ichimoku Kumo. I don't know. Maybe that's how they got the name. I'm also not very sure how they named it Ichimoku, right? And then we have the Chico. The Chico is this, which is also known as a lagging span. All right. So this is our lagging span and also known as the Chico span. Or rather, I'll just type Chico span actually to make it easier. All right, so here we have it, the six components of the Ichimoku cloud. Right, we have the Kijun Sen, we got the Tenkan Sen, we got the Senko B, we got the Senko span A, leading span A, leading span B, the Kumo, which is the cloud, and we have the Chiku span. All right, which is this green line here. All right, and you can see there's a specific factor of the Ichimoku cloud, and that is that the Ichimoku cloud extends into the future, right? We show something, right? What does it show? It shows that it uses it to forecast the future, right? So Ichimoku cloud can be used to forecast the future. All right. So this, I hope that by bringing this up, you all can understand the Ichimoku better, right? So now we have it. The Tenkan-sen, remember, is the blue line, right? The blue line. So the blue line, how we calculate is by looking at the default of 9 periods, and then the 9 period, and then use the highest high of the 9 period and the lowest low of this 9 period divided by 2. All right. And then for the Kinjun Sen, if you remember what's the Kinjun Sen? The Kinjun Sen is the red line. All right. The maroon line that is not engulfing the cloud, right? So that's the Kinjun Sen. The Kinjun Sen, the default period is 26, but the calculation for the plot is the same. Highest high plus lowest low divided by 2. All right. So this is basically the calculation. And then we have our Senko span A. Okay, so the Senko span A, remember, it is the span that engulfs the cloud, right? The Senko span A is the green line that engulfs the cloud. Okay, so the green line that engulfs the cloud, you use 52 period Tenkan Sen. Tenkan Sen, remember, is the blue line, all right? Plus 52 period Kijun Sen, all right? The maroon line, 52 periods of each, and then you add them together and you divide by 2 and you get the Senko span A. All right, and for Senko span B, you have the highest high plus lowest low divided by 2, right? So this is using 26 periods into the future. All right, and there are different forms the Kumo. So you use Senko span A minus Senko span B, you get the cloud, right? You get the cloud. So Senko span A forms the faster cloud boundary and Senko span B forms the slower boundary. So if I were to bring up the chart again to let you see, so you can see the green line here, the Senko span A is also known as the so-called leading one, and the Senko span B is the lagging one. And then the difference is the cloud, is the plot, right? And then what is the difference is that one is a movement, the cloud will form, right? The cloud will form. And if the leading span B is above leading span A, the cloud will become red color, right? You can see here, Senko span B, you can see here, let me just take away all this. You can see Senko span B, if it's above Senko span A, the cloud will be in red color. However, if Senko span A, this line is above Senko span B, then there will be the green cloud, right? It will be a green cloud. All right. So this is basically it for our Ichimoku cloud components. All right. Next. All right. So I realized this slide is no longer that useful because I already covered the components, right? Which is our components of the Ichimoku cloud, right? So instead of covering the components again, I think I will cover a bit in depth into the different components. All right. So okay, so I will just now relate different graphs, right? So this one is a bit misunderstanding, right? Because the Kijun Sen is actually the red line in real life, right? And then the Tenkan Sen is the blue line in real life. However, they swap the colors here, right? So I will not go through this slide already. All right, so we have the cloud, right? We have the cloud, and then we will go through. So I want to go through now the basic interpretation of the different lines, right? So the first interpretation of the cloud. All right, so let me just bring out the chart again. I think bringing out the chart is easier to explain than the presentation, right? So the easiest way to break down the chart is basically looking at whether the cloud is above or below the prices, right? So if price is here, right? If price is here and the cloud is below the prices, it is in a bullish trend, right? That's all you have to know for now. So this is just the basics, right? I'm going through the basics. So if price is higher than the cloud, it is a bullish trend in prices. However, if the cloud, let me just find where the cloud is above the prices, right? You can see here, if the cloud is above the prices, you can see here the cloud now is above the prices. It is in a bearish trend, right? So it is in a downtrend, right? It is in a downtrend if the cloud is above the prices. All right. Then what does it mean if you can see that the cloud and the prices are intersecting? Means right here, right? Means there is the prices are now in the middle of the cloud. What does it mean? It means that the trend is consolidating or ranging, right? It means that the prices are ranging right now if it's in the middle of the cloud, right? So it might not exactly happen that way because sometimes as you can see here, very clear, right? You can see here that you think it is in a ranging market, but actually it's not, right? It's just the cloud and then now it's in the uptrend, it's more bullish, right? So how I determine is usually not by Ichimoku clock, and is rather by trend line, right? So I just use trend line to take a look at whether I'm in a trending market or I'm in a consolidating market, right? And trend lines makes everything so much easier, right? Instead of using Ichimoku clock, right? So you can see if I draw a trend line right here, you can see it's a clear uptrend. Or I just look at price actions, right? Higher lows, higher highs. I can determine that on the weekly Euro USD, for example, is definitely in the uptrend. I do not need the Ichimoku cloud to tell me that, right? For example, here it shows that it is in consolidation. Then I would know that it is in a consolidating trend. So if I want to look at the trend, right, I will definitely zoom out to a high time period. I will use trend lines, right? The Ichimoku cloud will not be too, it is not too reliable in terms of telling the trend. However, the Ichimoku cloud can be reliable in trending markets, right? So the Ichimoku cloud, one of the best users is during a trending market. During a trending market, you can see that it is clearly either above the prices or below the prices, and you can tell what is the trend at that time. All right. So the thickness of the cloud, right? Next, we go to the thickness. Before that, we talk about the position of the cloud, right? So the thickness of the cloud also matters, right? So the thicker the cloud, the less likely the prices will break through, right? Think of it like a trampoline, right? If the trampoline is very strong, it is less likely for a fat man to go through the trampoline, right? However, if the trampoline is very thin, when the fat man bounces, he can go through the trampoline easier, right? So it works the same way for Ichimoku cloud, right? So you can see here, if a thick span here, you can see there's a thick span of cloud here, right? And prices are resisting it, right? You can see that prices are resisting it, and you can see that prices are find it hard to break through the cloud to the other side. However, when the cloud thins out, right, you can see this period here, there's a thinning out of the cloud, right? At this period, the cloud is very thin. You can see that prices have broke through out of the cloud before it forms a thicker cloud base again, right? So the thickness of the cloud matters as well. All right. So we talk about the thickness, and then now we will go in depth. So that is the basics, right? That's the basics. Now we'll go in depth into the different lines, right? Into the different lines. So first we have our Chico line, right? So let me just interpret the Chico line. So the Chico line, if you all can remember, is this line here, the green line, right? The Chico span. So the Chico span, if you remember how the calculation is done via candlesticks of 26 periods ago, right? So if the Chico is above the prices, is above the candlesticks of 26 period ago, we can say that price is in a bullish phase, right? If the candlesticks is below the if the Chico is below the prices, it is a bearish phase, right? It is a bearish phase. And we can talk about the Tenkan Sen. All right. Next we can talk about the Tenkan Sen, right? So in the Tenkan Sen, we know that the calculation is via the 9 and 26 period high and low. So highest high plus lowest low divided by 2, right? And look at the 9 period and the 26 period, right? And you use that to plot the Tenkan Sen, all right, which is the blue line, right? And this blue line is basically seen as like a moving average, right? So if you all didn't know how to look at moving averages, so let me just open a moving average on the graph, right? So let's go to this graph. Let's just say Facebook, right? And then we open up a moving average. All right. So basically, if moving average, basically prices are like resisting it. It's like a moving trend line, right? Just that it's a more dynamic. It's basically a more dynamic trend line. So if prices are above the moving average, so if you think of it as a trend line, it's on the uptrend, right? If prices are above this moving average, it's on the uptrend. If prices are below this moving average, then clearly it's on the downtrend, right? You can think of it as a downtrend line, right? And how to use it is I will change the length, right, to a Fibonacci number, and I will see which of the Fibonacci fits the graph the best, right? So for example, I will change to 21, and I see that using 21, it does have some reaction. However, prices have been cutting through it a lot, right? You can see prices cutting through the EMA a lot, right? The moving average a lot. So it is not exactly a very good moving average to use. So I can probably key in 34, which is the next Fibonacci number, right? And you can see prices are reacting off this trend line much better, right? And there's a break of this so-called dynamic trend line before retesting, before pushing down, right? So this is how I will use a EMA, right? So in this case, when we look at the Ichimoku cloud, the Tenkan Sen, which is the blue line, calculated by the highest high and the lowest low, and together divided by 2, is actually our moving average, right? So they can just they act just like support and resistances, right? Like our trend line, right? When it's going up, you can see that it is our moving average is on the uptrend, right? However, if it's below, if prices are below our Tenkan Sen, you can see that it is on a downtrend, right? Let me find a downtrend. And you can see here, right? So if I zoom in to our Tenkan Sen here, the Tenkan Sen is above our prices, right? Remember, the Tenkan Sen is a blue line, sorry, it's the blue line, right? And if the Tenkan Sen is above the prices, it shows a general downtrend. All right. So next we have gone through the Tenkan Sen already. All right. And then we can look at crossover, right? We can look at crossover. So when the crossover, which is the crossover between Tenkan and Kijun, right? So the Kijun is basically a lagging span of our Tenkan Sen, right? So if there's a crossover, you can see here, right? The red line crossover with the blue line, right? So you see here, if I zoom in clearer, you can see the blue line crossing over with the red line is actually known as a death cross. So in this case, a death cross shows a bearish signal, right? When there's a crossover, there's always a bearish signal. Or if there's another crossover, it signals a bullish crossover, because this line should always be above this line, because this line is the leading one and this one is the lagging one of the Tenkan Sen. All right, so that's basically it for our entire components, right? So I've gone through the Kinko, I've gone through the Kijun, I've gone through the Tenkan, I have gone through the intersection of the Tenkan and the Kijun. I went through the Senko span B, as well as the Kumo, right? For the Kumo, I've talked about the thickness of the cloud, I talked about the color of the cloud, I talked about the position of the cloud. All right. So basically, um, it's very complicated, right? You can see already. There's so many components of the Ichimoku cloud, and sure, you will get confused at the start, but this is just how I look at the Ichimoku cloud. And later, when I show you how I analyze with the Ichimoku cloud, actually, I don't even really use the Kijun or the Senko spans, right? I just look at the cloud and determine based on that. All right. So actually, all of this I can skip because I have already covered it, right? So you can see the interpretation of Kumo um, indicate indicate that whether it's bearish or bullish, right? And it is determined by the Senko, right? As you can see here, you see when the Senko span A crosses Senko span B, it causes the cloud to produce a red cloud, right? When Senko span A falls below Senko span B, sorry, when Senko span B crosses over Senko span A, you can see the crossover here, it becomes a green cloud, right? It becomes a green cloud. So that's how I look at the Senko span A and Senko span B. And then we have the Tenkan Sen and Kijun Sen. And like I said earlier, remember the death cross, right? When the Tenkan Sen crosses over with the Kijun Sen, bullish signal is generated. And when the other way is crossover, means the Kijun Sen crosses over with the Tenkan Sen, then it is a bearish signal, right? So sure, it can be very confusing, but hopefully you all are following, right? And once again, I just want to say that I do not use Ichimoku Cloud with with so many bases, right? Because it's really quite hard to use in terms of looking at so many factors, right? Such that I only look at the plots background, right? So later I'll show you how I use once again in my analysis. All right. A bit dry, but just bear with me so that you can understand all the components inside the Ichimoku cloud. All right. So here we have the Chico span, like I explained earlier. So if the Chico span is above the prices, the trends are considered to be bullish, right? So this is directly opposite of our Tenkan span and Kijun sen, right? So Kijun sen and Tenkan span is basically like our moving average. However, this the Chico span, which is our green line, let me just bring out the green line again. So you can see here, this line, the Chico span, when it's above the prices, it will be bullish. And if it's below the prices, it is bearish, right? So there's nothing much to explain about this. Actually, it's basically just showing the trend, right? If it's above, then it's bullish. If it's below, then it's bearish. All right. So and many traders use crossover with the price is a buy or sell signal, right? So crossover means when it crosses over the price, then they will buy or sell. Like for example, if the let's just say the Kinko span is here, right? And it crosses over the prices here, right? So many traders will take this as a signal to buy in because it shows a more bullish signal, right? It shows that prices are going up, right? However, I do not really encourage using that because many people have used that already, and many people are looking at that, which can cause a lot of market manipulation, right? In this case, everyone is looking at, for example, if looking at Chico span, then if they trade according to the Chico span, it might not be accurate anymore. So to get a more accurate entry or to get a more accurate trade, I strongly suggest against using just the individual components of the Ichimoku cloud. And even if you look at the entire Ichimoku cloud, you can have a PhD in studying the Ichimoku cloud. However, you can still not trade properly because Ichimoku cloud ultimately is still an indicator, and it is to be used with many other techniques, right? Such as looking at the trend, right? For example, if you are judging the Ichimoku, if you are judging the graph just by the Ichimoku cloud, it's hard for you to tell the trend because prices are cutting through the cloud bases, the Senko span A and the Kumo very frequently, right? So you cannot tell the trend when you look at Ichimoku cloud solely. All right. So we have come to the conclusion. So instead of looking at the conclusion here, let me just see whether there's any important points. Movements above or below the cloud define the overall direction. Within the trend, the cloud changes color as the trend ebbs and flows. Crossover or Tenkan-sen and Kijun-sen generate signals. Movement above or below the Chico span can be used to generate signals as well. And all 5 plots of Ichimoku Kinko here can be used as support and resistances. All right. So now that we have come to the end of our Ichimoku, I just want to state one of the limitations of Ichimoku that is very, very, very vital, right? So basically, one of the biggest limitation of Ichimoku cloud is that it only can be used for trending markets, right? If the market is in oscillation phase, right, the Ichimoku cloud will not work, right? So let me just pull out the graph once again. So I show you that, let's just say if we go to daily, right? If you go to daily, right, in this case, you can see Euro USD is in the uptrend, right? You can see that this whole period, Euro USD is in the uptrend. However, what about here, right? This period is obviously oscillating, right? And then you can see that the prices are just cutting through the Ichimoku Kinko here, right? And then prices, the Ichimoku is just below, above, and then you see the Kijun Sen and you see the Tenkan Sen, and you can't tell anything about it, right? You can see this moving average, right? It just cuts over, and then you see this small movement in prices. It's just very confusing, right? So the Ichimoku cloud cannot be used in an oscillation phase. In times where prices are oscillating, is actually a limiting factor, right? Because prices are not trending. However, if prices are trending, then the Ichimoku cloud will be of use. Why? Because you look at the Ichimoku cloud here, prices above the Ichimoku cloud uptrend, right? You can trade with the trend. The trend is always your friend. When the Ichimoku cloud is below the prices, you can buy in, right? And then if prices have crossed over the Ichimoku cloud, for example here, you realize that it's on a downtrend and you can short from here, right? So this is actually basically the main gist of the Ichimoku cloud, which is basically the limitation of not being able to trade in a oscillating market, or rather a trending market, but rather a ranging market, but only can be used in a trending market. All right. So without further ado, let's get on to how I use Ichimoku Cloud to do my own analysis, right? So we can look at Pound Aussie here, right? So this is just a very simple analysis that I've done, right? So please do not analyze like that. You must go deeper. You must go and find more levels before you go and trade, right? But this is basically a simple sample, right? So basically, let me just close out the Ichimoku first, all right? So if I were to see this graph right here, right? Lower high, lower high, lower high, lower low, lower low, lower low, right? And then I drew a trend line, and then there was a breakout of the trend line, right? So in this case, I would think a short position will be good, right? Because the ascending trend line support has been already broken, right? When the ascending trend line support broken, you expect that prices are going to be in a downtrend now, right? So I open up the EMA, right, which is our moving average, and you can see actually the moving average is quite good, the one that I chose. So for in this case, the EMA I put it at 55, which is also a Fibonacci number, right? You can see that prices are actually reacting off this line very well, right? It's reacting off this line very well, and in this case, if it goes through the graph, it is still reacting very well, right? So let's imagine this part does not exist. We are only looking at this part, right? We are only looking at the breakthrough of the trend line, right? So how do the Ichimoku cloud help in this, right? So when I look at the breaking of the trend line to confirm that the trend has been broken, I can open my Ichimoku cloud, right? Because like I said, the Ichimoku cloud can be used to look for breakouts, right? So I open my Ichimoku cloud, and wow, it's so complicated, right? And there's so many components to it. So what I do is I can go to settings and I go to style, right? When I go to style, I click away everything, leaving only the background, right? So the conversion line is our Tenkan Sen, the baseline is our Kijun Sen, and then our lagging span is our Chico Sen, Chico Sen, and then we have our lead one, which is our leading span A, and we have our lead two, which is leading span B. So I get away everything, which leave one left. And this one you all have you all will know what is it. It is the Kumo, right, which is just the cloud. I just left the cloud to see where it was going. So as if you can remember clearly, if the cloud is above prices, it shows a bearish pressure. If it is below the prices, it shows a bullish pressure. In this case, I look, and the prices before this break of the trend line is actually above, right? So I can be clear that it's in a bullish trend, and it can also be seen via the price action, right? Higher highs, higher lows, right? However, when it broke through the trend line, you can see that it is cutting through the Ichimoku cloud, right? It's cutting through the cloud base, right? And this is actually a alert, right? That the trend is going to change, right? Together with the break of the trend line, together with the break of our EMA, right? So you can see. Let me direct your attention to these three indicators right here, right? You can see the break of firstly the trend line, and then you can see the break of the EMA, and then lastly you can see the break of the Ichimoku cloud, right? When all three have break all together, then you can see you know that prices have changed for the bearish pressure, right? So you can short at this area here, right? Where I will short, how I will short depends on using Fibonacci levels, right? For example, if I were to do a retracement, okay, let's just say I do a retracement from high to low, all right? And if I open up the 38.2 or the 50% level, you can see that around here I can short. Why? Because at the 50% level is still in the cloud, right? So assumed we have assumed that prices are already going down, right? Prices are already going to push downwards, right? So it's just a matter of where. So you know that you will not really come back out of the Ichimoku cloud, right? And if we were to look only at this area here, right, where my cursor is, this line here, you probably will see the cloud extend into the future as red, right? You will see this here extended out as red color, right? So it already predicts the future as probably bearish. So you wouldn't expect the prices to cut back into the white area again, right? So you expect it to reverse around here, and where you will reverse, I will use Ichimoku. I will use Fibonacci, right? So in this case, I have very simply shown you how I have used together trend line, the moving average, as well as Fibonacci, as well as the lasting Ichimoku cloud to determine a change in trend, right? And all these factors have to be used, and you cannot just use Ichimoku cloud to determine the change in trend. Let's just say here, right? If we do not use the change in trend line, right, and then you see here it's cutting through, right? Then you think, oh, it's going to be a bearish move, right? Because it's cutting through the cloud, it's probably going to move into a bearish move down, right? However, it continue its bullish push up, right? Why? Once again, I can use trend line to prove it as well. It is in an uptrend line, right? It's in an uptrend line. However, you can see that it's hard to deceive when all three trend lines are broken at the same time. However, you can see when once again I do not have to use this example. I just drew another example here. You can see breaking of the trend line, breaking of the EMA, and breaking of the cloud shows bearish pressure in prices. Once again, where do you enter? I can take off Fibonacci retracement, probably 38.2 or maybe even 23.6% of the retracement before it pushes down. Once again, I can even use the trend line again, right? I can draw a counter trend line, and you can see that when I draw the trend line joining 1, 2, 1 and 2 place, you can see that at the trend line at the third touch here will be my entry before I short all the way down, right? And we can even use Fibonacci to determine our profit target, right? So for example, if I take a Fibonacci retracement, I can actually profit target all the way until the 1.127.2, right? You can see that the prices came all the way here before it pushes up again to test this area again, showing that this level is actually a very important level. All right. So this is very basic, right? I have shown you how to use these three factors to determine that it is a change in trend. However, let's move on to a much harder example to spot, right? So once again, let me get rid of the Ichimoku because it's very disruptive, right? So, right, we can see here, right? Once again, same structure in pound yen, all right? We can see the same structure, test, right? Three touches on the trend line before it broke through the trend line, right? And then it came back to retest before pushing down, before coming up again, right? So how do you know that I will enter at this point and not this point, right? I might even get stopped if I enter here, right? If I enter here, and the move is not complete, and I believe that this is probably the test of the trend line, and I shot from here, then I will have probably stopped out, right? I will have gone down, went up, and then when it was here, I probably would have stopped out, right? So what I can do is, firstly, I can draw the trend line in close, right? So where I draw the trend line in close, you will realize that actually, and then I change it to our candlesticks, right? When I change to our candlesticks, I realize that this point has not really touched the trend line yet. It has not really retested the trend line again. So I will have said that this is not a retest yet. And also, if I can do a Fibonacci retracement, right? So let's just say I open up the 50% mark. I can see that this react off the 50% mark. However, we are looking for support. We are looking for support, right? This area we are thinking of support, and it has not touched any support areas yet. These prices here, right? So if I were to circle this cluster of prices, this cluster of prices did not react off any single level yet, right? Showing that there is possibility of more of pushing downwards further before it reacts up again, right? So when I retracement of this move, when I did a retracement of this move, you can see that this move is quite clean, right? A clean move up. You can see that 61%, 61.8% level, right? It reacted nicely at this level here before bouncing up to retest our trend line again. And this we can take our retracement, right? So I took a retracement. So let me just get rid of all the drawing. So what I did was I did a retracement of this move, right, from high to low, right? So I took this move to 161.8, and I realized that imagine I was here, right? Imagine I was here. Let's just say let's just put a line here, all right? So let's just say that I was at this point right here, and it has already reacted off. It has already reacted off this place, and is pushing up, right? So I'm looking for a short opportunity. So what I will do is I will take a Fibonacci retracement. Where retracement from high to low, and then I realized that the 161.8 and the 127.2 lines up nicely with our uptrend line, which is intersecting with our uptrend line. But I still do not know whether the 127.2 will be the reacting point or the 161.8. Of course, I can say, oh, I will just leave it to 127.2% level, right? Why? Because it's much safer to get in, right? However, I wouldn't know. So this is where the Ichimoku cloud comes in, right? So I can open up my Ichimoku cloud. All right, and then you see here the Ichimoku cloud is actually already helping you to determine your entry, right? You can see here the tangent span, right, as well as our leading span A is very near, right? It cuts through the ascending trend line support, right? The ascending trend line support cuts through together with the tangent span A. Cuts through the tangent span as well as the leading span A, right? So at this area is actually a very important area, and it's a key area which lines up with our 161.8% retracement. All right, and this tells me that this is probably a good place to short. And then if I were to open up another retracement, so I think from high to low of this move, you realize that if I open up the 38.2% level, right, you can see okay, let me just take away the Ichimoku cloud. You can see that the 38.2% level lines up with our 161.8% level. So the 38.2% level is actually from this entire move, right? From this high to this low. This entire move with this small move, the previous move, right? Before this move happened, the previous move, right? So I'm actually breaking this entire move down into two different moves, right? So this can be known as one whole move. I can take this move as well as one whole move before I look at this move right here. And you realize that the 38.2% level and the 161.8% level lines up perfectly, right? So, and this lines up perfectly with our Ichimoku cloud, right? It lines up with the tangent span. It lines up with the tangent span. It lines up with a leading span A, right? And then it also lines up with our ascending trend line support, which is drawn in close for candles, right? Instead of drawing candles, we draw a line chart, which is the closing prices of all the candles. So it eliminates the wicks, right? And you realize that it hasn't touched us yet. So this is a very key level that I went in myself, right? And I shot from here, and you can see that prices went down from there, right? And then simple, what I did was I just went on for a profit target. Basically what I did was taking a Fibonacci retracement, right? So I can take away the Ichimoku cloud. So I took a retracement from the last move, right, from low to high, and then I opened up the 127.2, and you can see I took profit right here, right? So I took this entire move down, right? So this is how I did my analysis on the pairs, combining trend line, combining Fibonacci, combining with our Ichimoku cloud, right? As well as looking at the trend, as well as so I did not counter trend trade, right? I was looking at the pound yen on a higher hourly time frame, higher hourly time frame, on the daily time frame, on the weekly time frame, and realized that actually the trend line has been broken, and it has potential to break to push down further, right? Which is why I took the shot from here. So all I'm saying is, firstly, I did not just purely based on Ichimoku cloud and trade based on the Ichimoku cloud. Secondly, I did my research and look at the overall trend, right? I made sure that I wasn't trading against the trend. So I was trading because the trend is a friend, right? So I always traded with the trend. And lastly, I wanted to say that using Ichimoku cloud alone does not tell you much and can be very confusing, right? There's so many factors in the Ichimoku cloud. However, clearing it might be a better strategy, right? For example, you can see it's so cluttered now. Instead of using it, I can change everything. I can take everything away and only leave the plots background, which is a very saying of the change in trend, right? You can see the breakthrough. You can see from the cloud it pushes down, and then you can also see the forecast, right? You can see the forecast, right? You can see the forecast is going to continue the bullish trend right here, right? So anytime I do not use the full indicators of everything inside the Ichimoku cloud, because it's just too confusing for me. All right. So without further ado, I've actually come to the end of my lecture on Ichimoku cloud. Wow, it's really complicated, right? So I just want to ask: is there anyone who has any questions on Ichimoku cloud? All right. I see no questions on the Ichimoku cloud. So before I leave, let me just bring up one last thing. So firstly, thank you all for joining me in today's webinar on the Ichimoku cloud, right? Hopefully you all have learned something on trading with the Ichimoku cloud, and not only using the Ichimoku cloud to make decisions, right? But rather using the Ichimoku cloud together with many other many other indicators to make a informed decision. Right, next, I just want to do a shameless promotion, right? And XM is actually promoting our Telegram group, and as well as some lucky draw, right? So please participate in the lucky draw, right? So lastly, I just want to bring your attention to the webinars once again. So please attend the webinars tomorrow, right? So today is the trading of the Ichimoku cloud, and tomorrow will be the exclusive webinar series where we'll be covering daily news and daily setups of the day, and then we have our main webinars all lined up. right? And then next Tuesday will be introduction to forex at the MT4 platform held by my colleague Don. So Don will be going through with your how to use the MT4 platform, which I believe is quite important, right? Many of you know how to trade, maybe you know how to use the Ichimoku already, but it is important to find out some of the hacks, right? Some of the hacks that you can use on the Forex and MT4 platform, as well as don't forget all the exclusive webinar series where we will be bringing you through some of the top news setup of the day, as well as the top technical setups of the day, right? So if there's not much questions, and I have really come to the end of my lecture. So thank you all very much for spending your time with me and attending this webinar on Ichimoku Cloud. Hopefully you all have learned a thing or two. So stay safe, trade safe. Hope you all have a wonderful weekend ahead. All right.